Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is July 4th, 2025. I am Nova.
I am Satoshi.
Okay, so kicking things off with the market view. Broad gains in the last 24 hours. Bitcoin was pushing towards $110,000. It's now hovering near, $109K. Ethereum's holding around $2,577.
Yep, holding strong. And Solana had a decent jump, about 4%. XRP kept climbing too, hit about $2.24.
Well, the meme coins really popped off.
Oh, yeah, that really stands out. Dogecoin, Shiba Inu, up around 3-4%. But then you had Floki over 4% and Power spiking, over 7%. It's not just funny money, though. It signals a real surge in speculative appetite. People willing to take more risk. And you see that reflected in the crypto fear and greed index, too. It climbed to 73. That's firmly in greed territory.
73. Okay, so confidence is high, maybe too high, getting near overbought.
Could be. It's definitely something to watch. This is just optimism, but yeah, maybe nearing a point where a pullback could happen.
Now, speaking of pullbacks, there was that strong U.S. jobs report for June. Non-farm payrolls came in higher than expected, unemployment lower, and Bitcoin actually dipped a bit on that news. That feels counterintuitive for some listeners, maybe. Good economic news. Bad for Bitcoin. Why is that?
Well, zooming out a bit, stronger economic data like that makes the Federal Reserve less likely to cut interest rates soon. Less easy money. And crypto often rallies when money is cheap. So good economic news can sometimes pump the brakes on rate cuts, meaning crypto has to stand more on its own fundamentals.
We're less reliant on just Fed policy.
Exactly. But while that macro data might be a headwind short term, there's this really positive counter-narrative building up in Washington, D.C. There's actually a crypto week planned in Congress starting July 14th. They're lining up votes on some key bills.
Oh, really? Which ones?
Well, there's the Clarity Act. That's about defining crypto assets. Then the Anti-CBDC Surveillance State Act, pushing back against a government digital currency. And the Genius Act, focused on stablecoin rules.
Okay, so trying to bring some structure.
Definitely. And it seems to be a bipartisan push, fits with President Trump's generally pro-crypto comments, too. Plus, over in the Senate, key players like Tim Scott have committed to a vote on a broader market structure bill by September 30th.
That sounds significant. Clearer rules could really open the floodgates for institutions, couldn't it?
It's huge. Reducing that uncertainty is key for attracting big institutional capital. Makes it feel less like the Wild West for them, and hopefully for you, too.
Interesting. And speaking of shifts, there's this quiet power change happening with Bitcoin itself. Apparently, longtime whales have sold off, 500,000 Bitcoin over the last year?
Yeah, around that number. But the fascinating part is who bought it. It wasn't a crash. Large institutions just absorbed that supply.
Yeah.
They now control roughly 25% of all Bitcoin, a quarter of it.
25%?
So yeah.
That adds stability, right? Like a floor under the price.
It does provide strong support, yeah. Reduces the chances of those massive crashes we used to see.
Yeah.
But there's a flip side.
Which is?
It could also cap the explosive upside. Those crazy moonshots. Institutional buying tends to be steadier, less speculative.
So Bitcoin becomes maybe less volatile, more of a slow burn investment. Maturing, I guess.
That's a good way to put it. It signals Bitcoin is evolving, becoming a more established financial asset. Less Wild West, or a portfolio staple.
But risks still remain, obviously.
Absolutely. Look at the SEC putting a temporary pause on Grayscale's new digital large-cap fund ETF. Even approved products face ongoing scrutiny. It's not set in stone yet.
A reminder the regulators are still very much involved.
For sure. And then there are the security threats, which are getting scarily sophisticated. We need to talk about this Nimdor malware.
Right, the North Korean group, Lazarus.
Yeah, they're targeting macOS systems specifically. And they're using really advanced social engineering. We're talking fake Zoom invites, even deepfake technology to impersonate colleagues or contacts.
Deepfakes? Wow, to trick people into, installing something?
Exactly. Into downloading malware that steals their crypto wallet keys. It's incredibly devious.
That sounds terrifying. It just hammers home how careful you need to be, doesn't it? Vigilance isn't enough.
It really isn't. Hardware wallets for anything significant, two-factor authentication everywhere. These are absolutely critical now. Non-negotiable, really.
Okay. So wrapping this up, what's the takeaway for you, the listener? Seems like we're in this strong uptrend, lots of optimism, institutional buying, but these caution flags are definitely waving. Security, macro factors.
Yeah, I think it's about balancing that optimism. Be aware of the nuanced risks. You've got macro data potentially delaying rate cuts. You've got these incredibly sophisticated cyber threats. The market's still super dynamic. Staying informed, staying agile, that's still the best strategy you can have.
So it leaves us with a question to ponder, maybe for you listening. As crypto attracts more traditional finance players, as it gets more stable, does it lose some of that original disruptive edge, that Wild West appeal? Or is it actually gaining something more valuable stability and ultimately broader adoption? Something to think about. Enjoyed the brief? Please like and subscribe. We deliver fresh market updates, macro signals, and crypto news daily in just 5 minutes. Live streams coming soon. Stay tuned.